Paying taxes can feel overwhelming, but we're here to help you navigate it. There are multiple ways to make payments, and the right approach depends on your situation. Estimated tax payments or withholding is when taxpayers are required to deposit tax throughout the year to avoid penalties. This can be done through withholding on Form W-2 or other tax forms such as 1099-R, SSA 1099, etc., through quarterly estimated payments or a combination thereof. Required deposit. Required deposit is the lesser of 100% of your prior year tax liability. Unless your AGI was over $150,000, then it would be 110%, or 90% of your current year liability. Increasing income. If income is increasing year to year, you will not be penalized providing your deposit according to last year's tax liability. This is referred to as your safe harbor estimated payments. Decreasing income. If income is decreasing, you can deposit less throughout the year. Since this is more of a moving target, there is some risk of underpayment penalties if deposit requirements are not met. Here's some additional information about W-4s and under withholding. Form W-4. Most taxpayers pay their taxes through withholding at work. Your withholding is determined based on your Form W-4, which you provide to your employers instructing them how much to withhold from your paychecks. You can use the IRS tax withholding estimator to prepare your W-4. W-4 calculations. Form W-4 calculations work from withholding tables that make assumptions about the marginal tax rate that will apply to that income. Under withholding, for individuals with multiple jobs or families with multiple income sources, the withholding tables may assume you will earn income in lower tax brackets even if those brackets have already been used up by a spouse. This often leads to underwithholding and significant amounts owed with tax returns. Recommendations. We recommend that you consider a tax planning engagement in which we will assess your current level of withholding and make recommendations for any changes based on your tax payment preferences. If you want to be proactive, the IRS Tax Withholding Estimator is a great tool. You scroll down to click on the Tax Withholding Estimator and then follow the prompts to get your estimated tax withholding. Specifically talking about estimated payments and when to pay them, here's more information you need to know. Self-employed. Self-employed individuals and those with income sources not covered by withholding will pay estimated tax quarterly. Quarterly estimated tax payments are used to deposit tax and avoid underpayment penalties. Estimated tax deadlines: April 15th, June 15th, September 15th, and January 15th. Safe harbors. Estimated payments are often calculated on safe harbors, which can be based on the prior year tax liability, which may or may not be the same as your current year tax liability. As such, even though you have withholding and are making regular estimated payments, this does not prevent you from having to pay additional taxes when your tax return is filed. Everyone has different preferences when it comes to paying taxes. Some clients prefer refunds, others prefer to owe a manageable amount. Our goal is to understand your preference and help you plan accordingly so there are no unwelcome surprises. Some specific tax payment preferences include break even. The first option is break even, which means you prefer to get as close to break even on your tax return as possible. You are satisfied with either a small refund or a small balance due. This goal will be to pay your full tax liability throughout the year. Safe harbor. If you prefer a safe harbor, you prefer to pay the minimum amount required to avoid underpayment penalties. Delay payment. If you prefer this method, you prefer to delay payments and pay as much as possible with your tax return, despite likely incurring underpayment penalties. Refund. Last payment preference is a refund. Is when you prefer to overpay your taxes to generate a refund. You may choose to either apply the excess towards your next year's taxes or request a direct refund.